This conference will now be recorded.
Okay, in the last class, we talked about accounts payable related process, what kind of entries will get recorded, and what is the process that is followed if it is related to accounting, in short, the finance. If it is coming from the logistics, which is your how the data will flow, what exactly we will do, we understood in the last session with respect to accounts payable. Any questions on it? If no questions, we will proceed with accounts receivable today. Let's talk about accounts receivable today. Now, this accounts receivable is quite opposite to your accounts payable. If you understood what is payable, what is the transaction that we are performing with vendor, it is quite opposite to it. So, for vendor point of view, we see everything as a purchase, and from the customer point of view, you see everything as a sale. So, the way you are looking at the transaction from the purchase point of view, keeping vendor in mind, the same transaction with the same example, you need to see it from a customer point of view, keeping sales in your mind. So whatever is your expense will become a revenue, whatever is your liability will become your asset. So if I take back the reference of what we have listed in the last session, so that you will understand what we were talking about this. This is what we listed yesterday. Now what I will do, I'll just try to replace whatever I did for your accounts payable. I'll try to change the content with respect to accounts receivable, so that you will understand whatever is your understanding on your accounts payable will be the similar, will be exactly the same when it comes to receivable. In short, you're not supposed to spend the equal time that you spent on accounts payable. First point that you should spend on accounts payable, once you understand the payable, based on your payables understanding, you have to automatically understand receivable. If you're again sitting on the accounts receivable from the scratch, trying to understand everything, then what we are doing is wrong, because we need to understand the fact that receivable is quite opposite of your payable. If you know one which is your payable, the other one which is your receivable is easy. On the other side, if you know the receivable, payable is easy. What I will do now here, I'll just try to replace every content, keeping receivable or keeping a customer in my mind.
Ajay, please, would you not receive this Excel before you change it?
I have not shared, I forgot to share. I'll share today. Once the session is over, I'll share it right away.
Is it going to have yesterday's content? Because you say you're going to replace it.
Yes, it has the same.
Okay, thank you.
Yeah. Now, what I'm going to do, I have written accounts payable. I'm going to replace this with accounts receivable. In the accounts payable, we discussed you will have master data, transaction data, reporting. Even in accounts receivable, we will be having master data, transaction data, reporting. In the accounts receivable, you will not have vendor. So I'm replacing vendor with customers. So here you will not call it as a supplier. Okay, so I'll remove supplier. Here I have listed creditor. Creditor will be called as debtor. Seller is called as buyer. So in short, I have removed or I have renamed the content or the namings from accounts payable to accounts receivable, and I have written customers or debtor or buyer is what you deal with in your accounts receivable. So when it comes to master data, we are going to create customer as our master data. And when it comes to transaction data, you are not going to have purchases. In place of purchases, you are going to have sales. You will be having sales with the customer. And when you make any sale, customer will return sometimes. Customer will make you advance payment. Customer also will make you the payment. So the remaining content will remain constant. Returns, advances, payment is common. In case of a vendor, this is your vendor return. In case of customer, customer return. In case of a vendor, vendor advances. In case of a customer, customer advances. Payment, in case of a vendor, this is your vendor payment. In case of customer, this will be your customer payment. Next one, reporting. In the reporting also, what we are going to do, instead of vendor listing, you will be checking the customer list. In place of vendor balances, you will be looking at customer balances, and you will be looking at the aging report for the customer. If you want, you can also check for the payment information or payment details of your customers. Next one, to implement your accounts receivable, what you need to understand is your as is process, which is nothing but current process in the legacy system or in the existing system. Next one is your to be process. What is the to be process? Which we are proposing based on the existing process for your accounts receivable. To be process is nothing but proposed process in SAP. If you have any gap, let's say whatever they are currently doing in the existing system, if it is possible as it is in your SAP or not. If it is possible, it is a straight fit. If there is any gap, like whatever the process that they are doing or whatever the process that they want to bring into SAP, if it is possible, you are going to call it as a straight fit, because straight fit is nothing but based on the standard configuration, you can achieve the requirement. If it is not a straight fit, you are going to call it as a gap. This gap, you are going to fill it up with this RISEF object. This RISEF object you need to figure out. After that, we have listed finance related accounts payable. So here it will be finance related accounts receivable. So in this, what we have done, first one we have listed as purchase invoice. I will be replacing purchase invoice with sales invoice. And second one, returns credit memo. Third one is your advance payment. Fourth one is your customer payment. These will be the 4 transactions that we are going to write from the accounting point of view. When it comes to sales, in short, the sales invoice, you are going to debit customer. I'll put customer debit, and then I'm going to credit my sales. So my accounting entry will be customer account debit, sales account credit in case of a sales invoice. Those who are not talking, please be on mute.
Ya, Femi.
Yeah. Ivang, can you mute
Ya,
yourself?
Femi. Ya, Femi.
One sec, let me mute. Okay, in case of sales, we will be writing a customer account debit, sales account credit. In case of returns or credit memo, as we understood, the credit memo or returns entry is always reverse of your sales entry. In payable, we have put a reverse entry of purchases. In sales side, you will be writing a reverse entry of sales. Customer account is on the credit side. I am going to put customer account on the debit side. Now here sales was on the credit side. I am going to put sales sorry, here I need to debit sales. My credit will become debit here. Sales will be debit and the customer will be credit. Customer will be credit. So your returns entry is always reverse or the ulta entry of your sales. On the sales, we are debiting a customer account, we are crediting sales account. When there is a return from the customer or when there is a credit memo for the customer, we are going to put sales account debit, customer account credit. Similarly, whenever you receive any advance payment from your customer. So here the accounting entry what we wrote, vendor account was on the debit side. So vendor will be replaced by credit. Sorry, vendor will be replaced by your customer. Debit will be replaced by the credit. So what I will do here, I'll put bank incoming debit and I'm going to write customer credit. When you receive advance payment, bank incoming account will be debit, customer account will be credit. Similarly, whenever you receive any payment from the customer, accounting entry will remain same because the nature of business process is similar, whether it is an advance payment or it is a normal payment. In short, these are the accounting entries that we will be writing when it comes to finance related accounts receivable. Sales invoice, credit memo or sales returns, advance payment from customer, and normal payment received from the customer. Next one, we have listed FI/MM related accounts payable. Now MM is replaced with SD. Accounts payable is replaced by receivable. Next one is your FI/SD related accounts receivable. This is your logistics, but not MM. This is SD side. This will be logistics or the SD side. Here, instead of a P2P cycle, we are going to call it as O2C cycle, order to cash cycle. In the order to cash cycle, the sequence of the activities will be different. We have written purchase requisition. In the sales side, you don't get purchase requisition. Instead, you will get inquiry. Customer will place an inquiry with you. Based on that inquiry, you will be submitting quotations and all, which I'm not going to write as of now. Later on, we will try to understand it. Now we will try to understand the P2P cycle, in short the purchasing cycle from the purchase order, and the similar way you will have to understand sales cycle from the sales order. Whatever the purchase order you have written, I will be replacing my purchase order with sales order. Since I am purchasing, I was writing purchase order. Now here I am selling, I am writing sales order. Here you are going to supply the goods. In the purchasing side, you are going to receive the goods. When you purchase, we are receiving the goods. We have listed goods receipt note. On the sales side, you are not going to receive the goods. You are going to deliver the goods. So here I will be writing post goods issue. And before post goods issue, I will be having delivery. Sales order followed by the sales delivery and then the post goods issue. Next one, customer invoice is nothing but billing. Payment, bank reconciliation is as usual. These are the stages that you will be following when it comes to sales cycle. First, you will receive the order from the customer, which is nothing but a sales order. Based on the sales order, we will deliver the material to the customer. Based on the delivery and then the post goods issue. You need to issue the goods from your warehouse or from your plant, and then this goods you need to deliver to your customer. So these two are together posted, delivery and then the PGI, post goods issue, will be posted parallelly during your sales process. Once goods are delivered to the customer, you are going to produce a bill or you are going to give the invoice to the customer. Customer invoicing is nothing but billing in SAP. Once you provide the bill to the customer, customer will give you the payment. That is nothing but your payment transaction. Once payment is received, you are going to verify whether the payment is actually received or not via bank reconciliation statement, in short BRS. Now here let's try to understand what is the accounting impact for this process. Sales order, it is the same. Yesterday we assumed for purchase order there is no accounting entry because purchase order is the legal agreement between buyer and seller. In the similar way, sales order also does not have any accounting entry as your sales order is the legal agreement between buyer and seller. Customer will tell that I want so and so product to be delivered at this particular location by this date. This is the agreed price. All this information will be listed in the sales order. So in short, this is a legal document, does not contain any accounting document. Based on the sales order, you are going to make a delivery. Delivery will not have any accounting entry. Delivery will not have any accounting entry. Then you will have another entry called, or another transaction called, post goods issue or PGI. So we also call it as PGI. When you talk about post goods issue or PGI, here there will be an accounting entry. One sec. So when we are issuing the goods, we need to write cost of goods sold will be debit and inventory or material account will be credit. Inventory account, material account or stock account will get credited. Your cost of a goods sold account will get debited. This is the accounting entry that we write during the PGI, in short, post goods issue. After that, you are going to have a billing. In the billing, it is the same accounting entry. Customer account will be debit and sales account will be credit. Customer account debit, sales account credit when it comes to billing. And on the other side, when we write payment document, during the payment document, your bank incoming will be debit, customer account will be credit. This is the accounting entry we will be writing when it comes to customer payment, in short, the customer receipt. Finally, when you perform the bank reconciliation statement, you will be writing bank main account debit and bank incoming will be credit. This accounting entry we will be writing when it comes to bank reconciliation. In short, this is the O2C cycle, or this is the order to cash cycle. If you look at this and if you compare with your P2P cycle or accounts payable, it is quite opposite. So we will not find it difficult anywhere if you see it from the payable side. One side we need to make sure that you understand thoroughly. Based on one side of your understanding, either payable or the receivable, the remaining point can be understood easily. Any questions on this?
Hello,
Yeah.
sir. I have a doubt in AGIS and 2B document. Can you give me an example so I can easily understand it?
So as is and a 2B process is nothing but, let's say, currently when I am doing my accounts receivable, okay, currently when I'm doing my accounts receivable, I would say that we are billing to the customer well in advance, even before we deliver to the customer. Sometimes what will happen, I will go to a shop or I'll go to a supplier who is producing or who is giving the bill, or a customer is coming to me. What I will tell, okay, you come to me, you place your order, I will give you the bill in advance, you go to the warehouse and then collect your product. Is this possible or not? I can give you the bill even before I deliver any product.
Yes.
But let's say this is what you're currently following in your existing system. Let's say in your current system, there is no control point that your customer will receive the bill, or your billing counter is able to generate the bill even before they produce the delivery, even before they issue the material to the customer. Now, this process is not possible in SAP. Your client says, no, currently we are doing like this. We want to do like this only in SAP also. Even before we process the delivery, even before we issue the goods, we wanted to produce the billing document. Then we will tell that, no, this is not the standard process. This is not the right approach to deliver, to produce the billing document to the customer even before you deliver any product. In SAP, what you will have, whenever you want to generate any billing, you have two levels of billing. One is order based billing, the other one is a delivery based billing. So what is order based billing? You can generate the bill or you can generate the invoice based on the sales order. The second one, you can generate this invoice or you can generate the billing based on the delivery document. How do you want to deliver this? If your client says, no, this is what we are currently doing, Now we are not able to track that. I have already produced the invoice to the customer. Now customer is coming and telling I did not receive the material. But as per me, when I perform the reconciliation, I am able to see all the materials with me in the stock, but I am able to see this material is sold. I'm unable to reconcile what is actually sold, how much is actually billed to the customer, because the stock that I have given out to the customer and the invoices that I have done, I have billed to the customer, I am not able to understand because of the delay in the process, or because certain processes are getting executed in a non-sequential manner. Now what you will tell, these processes are eliminated in SAP. In SAP, when you perform the sales order, after the sales order you have to post the delivery. When you post the delivery according to sales order, you are confirming that goods are issued to the customer or goods are delivered to the customer. You are going to deliver goods to the customer only when you pick goods from your warehouse, or only when you pick goods from your stock. So when you are picking goods from your stock, you need to stock out your material. When you're stocking out your material, you need to pass an accounting entry crediting your inventory. Whatever the value that you have your inventory, this amount will have to be credited, in short, the reduced, to the extent of what you have delivered to your customer. Only after delivery, billing is possible in SAP. Without delivering the product, you cannot bill in SAP. Now they may say that there is a gap in your current process. It is not the sequential order. It will lead to unnecessary reconciliation problems. Similarly, they might say that I have received a sales order, but on the sales order, if the quantity that is produced is a 10, let's say I placed an order or I received an order from a particular customer to deliver 10 quantity. In my current system, I would say I am able to deliver 20 quantity to the customer. Even though my order is telling 10, I am able to deliver 20 to the customer. I don't have a control where the remaining 10 has gone. Now these controls, I would say these are possible in SAP. If your order shows 10 quantity, your accountant or your delivery person cannot bill or cannot deliver more than 10. If you create the order for 10 quantity, you cannot bill more than 10 quantity. Clear? So these kind of
Yes, sir.
normal basic processes we need to take. What is currently happening on the ground? It is not that we try to think, we try to understand from the accounting point. First point, we are talking about accounting point, because at the end, as a consultant, we are responsible to bring this accounting into the system. Correct? Huh?
Correct. Correct.
I am going to say this is working fine only when I am able to generate a document on the system. So this is your end point. So that is what we are currently talking about, the process from the accounting point at the beginning. Once we are talking about accounts receivable topic, we will be discussing about the practical examples. In general, how your customer will place an order, how an organization will receive the order, how do they deliver it, who will deliver it, and then from where the goods will be picked. How do they know that whether the stock is in stock, in short, stock is available or not? If available, how do they proceed? If not available, what will they do? And who will process this PGI document? What exactly is your PGI? Next, billing. How do they do the billing document? Is this billing document and accounting document same? If same, how this billing document and accounting document are same? If not same, why they are not same? So when you create the billing document, will it automatically reflect in accounting? Yes. Are there any chances your billing document is generated but accounting document is not generated? Yes, there are many instances where billing document will get created but accounting document is not created. So these are your accounting interface related errors. Maybe period is not opened, or GL account is not there, customer account is not extended to the particular sales organization, or your tax values are wrong. Maybe any reason could be there, due to which your accounting entry is not posted. Now how we are going to provide the bill to the customer? So you have to give a bill to the customer. How this bill will come from SAP, and who will create this billing form or billing format? Is this billing created by the SD consultant or by the FI consultant? If it is created by the SD consultant, will there be any role to be played by the FI consultant while generating the billing document or invoice? Normally, when you look at any invoice copy, your invoice copies will majoritarily talk about please make payment to so and so bank address. Is that correct?
Correct,
On
sir.
your
Correct.
invoices, you are going to have some information called please remit your payment to so and so bank information or to so and so address. And on your invoice, you have to mention the tax identification number or VAT number, correct?
Yes, sir.
And also on your invoice, you need to mention your company name and address, correct?
Yes, sir.
Now, from where this information will come, if you're talking about the address, now on your invoice, from where the address will come? Is this address logic to be provided by the SD consultant, or is this address logic to be provided by the FI consultant? And when you're talking about VAT number or tax identification number to be printed on the invoice, who is going to maintain this tax identification number? Where is this updated? This you need to know. If they're talking about please remit payment to so and so bank account or send your checks to so and so address, from where this address is updated, from where the bank account information is extracted, who is going to provide this logic? Is this provided by SD consultant, or SD consultant will ask FI consultant to provide the input? So these points we need to understand, which we will be understanding when we are talking about FISD integration on the system. But now what we are understanding is only at high level to make sure that we understand what is what, so that something will hit your mind that okay, these are the points related to accounts receivable which I need to understand. So nowhere I'm talking about the configuration. If you remember, whether it is your accounts payable or your accounts receivable, did we write anywhere configuration steps, T codes?
No.
We're not writing any configurations, we're not writing any transaction codes. First thing that we need to do is we need to understand the process as it is. When we understand the process as it is, you're not injecting any configuration, any T codes into your mind. You're only trying to adopt the business process, so that when you do the configuration on your SAP, this business process understanding is going to help you understand SAP in a better way. Because you will start thinking that I want to do like this, how will I do it, what settings I need to make? Otherwise you have to go the reverse way. The reverse way will not work all the time. Reverse way will create unnecessary confusions, will create unnecessary complications majority of the times. So that is why you should always think from the business point of view. Based on the business point of view, see it the SAP point of view. Then you can easily figure out, okay, this is what is the business requirement, this is how SAP works. Then matching your business process with SAP process will become easier for you, because you have the basic understanding about business. You are also having basic understanding about SAP. Now as a consultant, you need to join SAP with business process. So for you to join, no other option, you must know about business process, you must know about SAP process. Am I correct?
Correct.
So SAP
Correct.
process, anyways, we are going to do it, because our course is not complete without doing the SAP process. I cannot say accounts payable is completed without posting a document. For post a document, I must create the config. To create the config, why am I creating? I need to explain you. I need to make sure you are understanding why we are doing this config. If I straight away explain these processes while doing the configuration, everything will be a bouncer. Nothing is clear. Because in one go, it is not possible for anybody to understand, including me. I also will not understand if I am at your position in one go. So when we listen to it one or two times, slowly we will start understanding, okay, this is what is your accounts payable, this is what is your receivable, these are the entries that are getting posted. Slowly we will try to get used to it, because the way we are talking, the way we are discussing is something different. Those who already took training, those who are already working, those who are new to SAP may find it a little tricky, a little difficult. Why are we talking about all these points? Because I will connect all the dots in the upcoming sessions. I will put a dot and then leave it here, but this dot is connected somewhere else. Clear?
Yes, sir. Got it.
Yeah. Any questions on this?
Sir, I
Uh,
have a doubt.
Sir, good evening.
Yeah, good
In
evening.
case of post-course issue, we say we receive the return from the customer, whether we don't have any entry for the from the SD side. Similar case at the MM also.
Yes, the same entry will get processed reverse.
Reverse.
If somebody is
Okay.
returning the goods, you credited your invoice, you inventory, you decreased your invoice. Now the stock is coming back to you, right?
Yes.
You need to increase your inventory. Your inventory will go debit. You expensed out your inventory because the stock is going out. Now your stock is coming inside. The expense that you posted, you have to reverse. The cost of goods sold from debit, it will become credit. In short, the same entry will posted ulta. Debit as credit, credit as debit.
Okay. In FI AP and FI SD, both the cases it is credit memo, sir.
Yes, it is credit memo only. From the
Both
core
the
accounting side, we call it as debit memo, credit memo. But from the SAP side, we don't use this terminology debit memo, credit memo. We use credit memo only. Credit memo is your invoice adjustment in short.
for both the cases.
For both the cases, we use the same terminology, credit memo.
Okay.
From the
Thank you,
accounting point of view, we will use debit memo, credit memo. But from the SAP point of view, for both, we will be using same terminology called credit memo. In short, with an intention of invoice adjustment.
Thank you, sir. Thank you.
Yep.
Sir, good
Okay.
evening.
Good evening.
Uh, Sir, my question is like if we compare purchase order to sale order, like when we are preparing the purchase order, we will deliver it to the vendor for a legal terminology so that the vendor can deliver the goods as per the stipulated time period or as per the stipulated terms and condition. So we can we deliver a sale order to customer also?
What do you mean by sale order delivery?
No, no, I'm
Which
saying
delivery you mean to say?
when we prepare, when I'm preparing the sales order, should we have given it to the customer also?
No, your voice is having some disturbance. Please repeat your question again. Sorry for it.
Sir, I'm saying, is it audible right now?
Yeah, it's audible, but a lot of disturbance in between, a lot of background noise from your side.
Uh,
Yeah, go ahead now.
Sir,
Now it's okay.
yeah. Now, when we prepare a purchase order, we can deliver it to the vendor. Like it's terms and condition we have mentioned over the purchase order. So, may I know in this when we
You mean
prepare a
to
sale
say
order?
purchase order document you are submitting to the vendor. In the similar way, are
Yes.
we submitting sales order to the customer?
Abs-
Is this what your question?
Yes, sir. Yes, sir.
Now the sales order is not given to the customer. Sales order is given to the stores person, because the person who is in the stock or the person who is supposed to deliver the product should know where to deliver, right? Let's say I am the person
Okay.
who is receiving the orders from the customer, but I am only responsible for receiving the orders and then recording the order in the system. Once I receive the order, record it in the system. Let's say you are the delivery person and you are the stores person or the stores in charge, who is supposed to look at how many orders we have from the customer, what are the products that we need to deliver, where we need to deliver, by what time you need to deliver. Now for you to do this delivery, you are dependent on sales order, correct?
Okay, sir.
You
Okay.
will pick the sales order. Based on the sales order, you need to first do the PGI. Before you deliver to the customer, you need to pick the product. Is that right?
Okay.
You need to
Yes,
pick the
sir.
product from your stock before you deliver it to the customer. Now, for you to pick the product, you must know which product to be delivered, which product to be picked up, what quantity. For that, you are dependent on sales order. Your delivery is always based on the sales order. Whoever is creating the delivery will require the sales order information. So, in short, the sales order will not go to the customer physically. Sales order will be within your organization. Customer will receive only the
Okay.
invoice, and
So
the
the del
packing list or packing slip will be given. Yeah, go ahead.
okay. So, sir, the delivery person and the person who is doing a PGI, both are different or both are the same?
Both are the same.
But the person who is doing the billing, it is different from the
It is
delivery
different.
person and the PGA person. Yes. Okay. And sir, one more. What is the difference between the delivery and the post good issue? Like normally, we use the same terminology, but what is the difference between delivery and the PGI?
Delivery is going to update in your SD module stating that whatever the order that you received is delivered. Okay, delivery will not update your stock, but when you're delivering, you're reducing your stock, correct? Huh?
Absolutely, sir.
Now, for you to reduce the stock, you need to post PGI, post goods issue. This post goods issue will update your side. During delivery, your SD module says that, okay, the product that you have received the order has been delivered. Whatever the product that you delivered is issued from your stock. For that, you need to post PGI, post goods issue. So delivery will not have any accounting entry. It is only an update on the sales order that this particular item from this order has been delivered to the customer. But you should also make sure that the quantity is reduced from your material or from your stock. For that, PGI will have to be posted. This will hit your accounting entry. This is from side. Delivery will
Okay.
update your SD module. PGI will update your module.
Okay, sir.
Clear?
Okay. Thank you.
Yeah. Okay. Any other questions on this? If not, we'll proceed to the next process.
Hello. Sir,
Yeah.
my question is from sales order to up to billing, who is going to configure the data for this, and from payment to BRS, who is responsible for the configuration data in SAP?
You will be able to create the sales order based on the SD configuration. Okay.
Okay.
And you will be able to do the delivery based on the SD configuration. You will be able to do the billing, do the PGI based on FI config should be there to post the accounting entry. Configuration should be there to pass the in and out to your material or to your logistics. SD module should also be there because without sales order, without delivery, you cannot do PGI.
Okay.
Billing is FI and SD. Payment is
SD.
pure FI. BRS is pure FI.
Okay. And one more question is cost of goods sold account under which account group, sir? We have to create
This is
Expense.
P&L expense account.
P&L expense account, right?
P&L expense account.
Sir, please, can you just give a high-level overview of the FIMM? I did not quite catch that in the post-good issue.
Okay. If you look at this is a post goods issue. In the post goods issue, there is an accounting impact. So you have finance and you have logistics. In the finance, you're responsible or you're looking at the balance sheet. In the logistics, you're looking at the stock. Clear?
Please, can
Let's
somebody
say
go on mute, please? It's hard to hear without so much noise.
those who are not talking, please be on mute.
I think it's coming from Shoma.
Okay. Now, assuming that I am delivering or I'm issuing laptop, or I would say 2 laptops issued. I will say I am issuing 2 laptops to the customer. When I say that I am issuing 2 laptops to the customer, point number one, before I issue the laptop, I should have stock available with me. So before I provide or before I hand over 2 laptops to my customer, I will make sure that I have the sufficient stock with me to check whether the stock is available or not. I am dependent on logistics. Logistics is nothing but module. Here I am going to look at the stock. This will display only the quantity. This is going to display only the quantity. I would say the available quantity currently is 10 quantity is currently available in stock. Now in your finance side, on your balance sheet, you are going to represent value of this 10 stock is represented in your balance sheet. I would say each laptop is costing me some 50,000. Each laptop is costing me 50,000. My balance sheet will show 10 multiplied by 50,000. This is what is currently represented in my balance sheet. Are these two figures clear before issuing the stock?
Yes.
Now what is happening? I received an order from the customer wherein I need to produce or I need to deliver 2 units to my customer. I'll put this in yellow. So when I'm delivering 2 units to the customer, from the SD side, I have updated that 2 units are issued to the customer. You can please go and collect from the warehouse or from the stock. What I need to do, I need to do a -2 here. Correct? From my stock, I need to reduce 2. Is this clear?
Yes.
From my material, I need to do a deduction of 2. I need to issue 2 units from it. Now here, my stock count will become 8. In the material side, my stock count is becoming 8. Is this clear?
Yes.
After issuing the goods, this is becoming 2. Now your stock will always represent a value in the balance sheet because your inventory is a current asset. It is always represented on your balance sheet as an asset. Currently, before you issued 2 units, your balance sheet 5 lakh is equivalent to 10 unit cost or 10 unit value. Now from your stock, you have removed 2 quantity. When you remove 2 quantity from the balance sheet, the equivalent value of the 2 quantity must be reduced. So what will happen here? 2 multiplied by 50,000 is how much? 1 lakh? Because we were taking 50,000 each. So I will reduce 1 lakh from here. This 1 lakh, let me put yellow. And in my balance sheet, now I am representing 4 lakhs. Is this clear? When you do PGI, this is what is going to happen in the backend. Your PGI is going to reduce the stock from the material master, in short, the logistics module. It is also going to reduce the value from your balance sheet current asset, which is your inventory. So that is why we've mentioned for PGI, there is an accounting impact. You have written accounting entry. Cost of goods sold debit, inventory credit. Your inventory, this is what your inventory is doing. Your inventory is updating quantity in the side, value in the FI side. Clear?
Yes.
Yeah. Okay. And the next one, what we need to understand here is, after this, the next process that we need to focus is on the profit calculation on sales.
Sir, sorry to interrupt. Before we go to this next step, but you said the cost of goods sold is profit and loss account, right? But yeah, you showed us right that is balance sheet account something. We are reducing 10 lakh from, sorry, 1 lakh
This
from
is
balance sheet,
the
right?
impact for your stock. Whatever the stock that you are representing, your stock is having some value, right? The stock is not a free item that we are holding it. Agree?
Yeah. Yes, yes,
Right? Whenever you're talking about stock, your stock or your inventory will have two updates. One is your quantity update, the other one is value update. Quantity update will hit your logistics, which is your Value update will hit your finance, which is your accounting. So when you issued two laptops I am going to reduce from my stock. Current stock is 10.
yeah.
I have issued two laptops. 8 will be my current stock. Now in your balance sheet, currently the value which is showing is 10 laptops value. Correct? Huh?
Yeah.
After you issue the two laptops, you have to reduce the two laptop value from the balance sheet value. Otherwise, your asset is overstated.
Yes, yes.
Right. So that is what, whenever you do any update to the material, this will automatically have an update on the value also. Finance also is auto updated based on your quantity update.
Okay, sir.
Okay.
Yeah.
Now, next one that we need to understand is profit calculation on sales. Now, we talked about accounts payable. We also talked about accounts receivable. On the accounts receivable, you are going to sell something to a customer. Whenever you are selling anything to a customer, the next question that comes in your mind is whether I am making a profit from this sale or I am making a loss from this sale. So we need to understand whether we are making a profit or loss from a particular sale. How the sale related profit or loss is calculated. Right? So when you wanted to find out the profit, there is a formula for profit. Your profit is equal to sales minus COGS. Sales minus COGS, in short, cost of goods sold, will give you profit. Now, if you look at the SD cycle, first one we have sales order, second one I would say delivery and PGI, third one is billing, fourth one is the payment. So I'm writing payment only. The reason why I'm not writing receipt is that I wanted to make sure that you understand payment in such a way that incoming payment, outgoing payment. In SAP, when you're talking about payments, you will not talk about payment receipt. So at both the positions, you will be talking about payment, but this payment will have a prefix. If you are receiving the payment, we call it as incoming payment. If you are making the payment, you will call it as outgoing payment. That is the reason I'm not writing receipt. I'm not writing customer receipt also. I'm writing only the payment. And finally, you will write BRS. Okay. Now, sales order, let's say 10 at the rate 100 is the order. When I'm talking about sales order, 10 at the rate 100. 10 at the rate 100, I mean to say 10 quantity at the rate 100 each you have to deliver to the customer. Now, sales order, whatever you get, is this related to delivery? Is this related to sales? Whatever the quantity amount that I mentioned in the sales order, is this reflecting my delivery or is this reflecting my invoice or billing?
Sir, cost of material will be a delivery.
The amount I'm talking about, 10 at the rate 100, is this the value of my delivery or is this value of my bill invoice?
Billing only, sir.
The invoice value.
This
Delivery,
is
sir.
this is related to billing, not the delivery, because
Delivery
you're
is
the
about
customer,
quantity, I think. Sorry, sir.
you're my customer who came to me and you told me that I wanted to purchase this item 10 quantity. Before you place the order, am I going to tell you the selling price or not?
Yes.
Yes or no? When you come to me to purchase a particular product, you tell me that Mr. Ajay, I want to buy this product. How much it is? I am going to tell this is 100 rupees. You may negotiate, you may try to bargain. Can you give it for 8 rupees? Can you give it for 8.59, 9.5? I may say no. Sorry, this is fixed price, 10 per unit. No discount in it, no negotiations, no bargains. Then you will tell, okay, you please give me 10 quantity. What I am going to do, I am going to give you 10 quantity at the rate 100 each. Now the 10 multiplied by 100, is this the selling price or cost price? It's selling price.
Selling price.
This is the selling price. So remember, whatever you write in the sales order is your sales price. In short, the selling price. Now here in my billing, I am going to put 10 at the rate 100. 10 at the rate 100, I am going to put in my billing. Now delivery is nothing but cost price. So this is your sale price. This is the product cost. I would let me put it product cost to make it simple. So wherever you're talking about cost, cost does not include profit, price includes profit. Clear? The difference between your cost and price is the profit. If you're adding profit, I will tell price. If I'm not adding profit, I will call it as cost. Am I correct?
Yes, Ajay, you are
If
right.
I'm talking about price, I'm including profit in it. If I'm talking about cost, my cost does not include profit. Okay, so what is my cost? I need to know. What is my price? I need to know. Price you will get to know from the sales order. Cost you will get to know from the delivery. So here I will say cost for this is 100 at the rate 80. 100 at the rate 80 is my cost, and bill is going to be 100 at the rate, sorry, 10 at the rate 100. Now when I write the accounting entry here, first one is your PGI, or I would say delivery and PGI. During this delivery and PGI, there is one accounting entry. We assume that the accounting entry will be COGS debit, inventory credit. Correct? And there is something called billing. During billing also there is another accounting entry. This will be customer account debit, sales account credit. Now your delivery or your PGI is talking about product cost. Whatever the product or service that you're delivering, cost of that product, cost of that service you have to include in your delivery or PGI. This does not include any profit. So here what I need to write, 10 multiplied by 100 or 10 multiplied by 80.
10 multiplied by
10 multiplied by 80. So this will be is equal to 10 multiplied by 80. This will be 800 on the debit side, 800 on the credit side. Right now when I'm doing billing to the customer, my customer billing will be based on 10 multiplied by 80 or 10 multiplied by 100.
10 multiplied by 100.
Right, so I'll take 10 multiplied by 100 and I'll put 10 multiplied by 100. This is what I'm getting. Now if I look at my delivery entry, I only come to know what is the delivery cost. If I look at the delivery, I only come to know what is my delivery cost. In short, the value of product which I have delivered or value of service which I have rendered. In short, the delivery cost of your product or service you will come to know during PGI or delivery. During the billing, you will come to know only the sale value that you are charging to the customer. The person who is looking at delivery will not have access to look at the billing. The person who is doing the billing will not have access to look at the delivery. Correct? There is something called SOD, which is nothing but segregation of duties. based on segregation of duties. If I am the person who is creating the billing to the customer, let's say I am selling a product to the customer at 1000 rupees. Now, as a salesperson, I will not be knowing what is the value of this product to my company because I'm not the owner of the company, correct? Huh? Am I supposed to know what is the value of my product which I'm selling to the customer? I am just an
No, sir.
employee in the organization, right? Is this confidential information or is something anybody who opens the accounting entry can view it?
No, it is
No, sir.
confidential.
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 This is confidential information. The staff or the other person would not be able to see this information. That is why when you process any billing document, your accounting entry is customer account debit, sales credit. You are not going to write profit on the sales, loss on the sales. Whenever we talk about the sales, the immediate question that should strike our mind is, what are we getting by this sale? Are we getting profit or are we getting a loss? Right? Is this valid point to strike our mind or not when you talk about sales?
Yes, sir.
Valid.
Right?
Valid.
Right? Tomorrow, let's say we are talking about the sales process or purchasing process, in short, APAR to some person. Let's say you're explaining very confidently. I understood accounts payable, I understood accounts receivable, I practiced so many times. Now I'm very good at config and all. I'll simply put a basic question. Can you tell me how do you identify whether you're getting profit or loss on a particular sale? If we are unable to answer this a simple question, so will it be okay or not okay?
No, not okay.
This is obviously not okay, right? Whatever I'm talking about AP, whatever I'm talking about AR, whatever the configs, accounting entries, process, whatever I'm telling, if I'm unable to answer how my profit is calculated, I cannot say anything that I do not know. I cannot even say I forgot. Yes or no? It's a very tricky situation for anybody, irrespective of your experience. Whether you are a fresher or you are an experienced candidate, there are certain questions like this. There are certain processes where if you are unable to think practically, where we are unable to get the logical answers, logical thinking, it is a very awkward situation in front of anybody. Now here we assumed that your profit is calculated based on sales minus cost of goods sold. Here is your sales figure. Here is the sales figure. Here is your cost of goods sold. Now, if I look at my financials, if I go to my P&L, on my P&L side, one side I have expenses, on the other side I will have my income or revenue. Is this cost of goods sold expense or income?
Expense.
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 Expense. So in my P&L, I'll put 800 on the debit side. What about this sales? Is this income or expense?
It's the income credited.
Income.
Income. I'll put 1000 here.
Right.
Now, if I do 1000 on the debit side, if I do this one, my income is more, my expense is less. If my income is more, I am going to get a profit. So if I put 200 here, my P&L, my accounting is matching at 100. So this 200, I call it as profit. Correct? Huh?
Correct, sir.
Correct, sir. Correct.
Now, when you create your P&L, are you going to write only sales cost of goods sold, or you're also going to write other information like salaries, rent, electricity bill, bank charges, commission, other content,
All
All the
expenses, sir.
other content as well.
right? Let's say I am writing other content like, let's say 150 salaries and 50 or 100, I'll say other expenses. Income side, let's say I have written 50 as miscellaneous income. Now, if I do a total, it is getting 1050. Is there any profit loss?
No.
There is no profit, there is no loss. Let's say I will add another expense. Let's say rent. I'll say 150. Now,
Loss.
no, there is a loss. Practically, if you look at this sale, are you getting loss from this sale?
No, sir.
If I look
It
at
is
this
net.
sale, my product value is 800. This 800 worth product, I am selling it for 1000. Now, by looking at my sale, I must be in a position to tell 200 is my profit. But when I look at my P&L, I am not able to figure out this 200. Correct? Huh?
Yes, sir.
Because in your
Correct.
P&L, you are going to write all the operating expenses related to your business during the month. Now, your P&L does not include only the sales, only the cost of goods sold. It will also include all your operating expenses. In short, the sale wise profit you will not be able to track from the P&L. If I want to say on this particular sale, on this particular bill, can you tell me how much is my profit? Or I would say, can you tell me how much profit I am making from this particular customer? Possible or not? Let's say I am selling every month to a particular customer 3-4 times. From the last 6 months, I want to know, by selling to this customer, am I making profit or loss? Is this a valid requirement or not?
It's valid.
Valid requirement.
Now, if I want to go at that level, will my P&L provide the information that I am looking for?
No.
No.
My P&L will not provide the information that I am looking for. So whenever I am talking about the sales related profit, which I want to find out whether on a particular sale, if I'm making profit or loss, or any other key combination, let's say from this particular product, am I making profit or loss? For this particular product, from this particular customer, any key combination if you want to put, there is a tool called COPA. There is a tool called COPA. This is nothing but
Coupa.
profitability analysis. Using this profitability analysis, you will be able to find out whether you are making profit or loss. In short, product level profitability is always analyzed from COPA, not from the accounting. Accounting, you will get to know the operating profit, overall business profit. I cannot segregate by doing sales alone, I got this profit. You may be incurring various other expenses to run your business, correct? Huh? You may be getting income from different other sources apart from sales. Am I correct?
Yes, sir.
Yes,
Correct.
yes. Now, if I look at my P&L, I cannot say this is my actual profit. This is my operating profit. To operate my business or to run my business for a particular month, this is what the costs that I'm incurring. These are the incomes that I'm generating. If I take my total cost to run my business for a particular month, and if I take my total revenue that I generated from this particular month, the difference I'm calling it, or the difference I'm declaring as my profit, my operating profit or my business profit. But whereas my intention is to look at the product level profitability. For that, I'm not supposed to depend on the financial reporting. I will be dependent on my COPA reporting. COPA reporting is part of controlling module. The moment you talk about sales, you have to talk three elements. Point number one, accounting side, accounts receivable, and the logistics side, SD module, sales order, delivery, all this kind of information. Third one, which is very important, COPA. Whether you configure, whether you work on COPA or not is always secondary, but you must know that COPA is also involved here. Anybody who is using SD module will be using a COPA module. You must know what is COPA, what comes from COPA. At least these 2-3 lines, if you are aware, at least you know that this is COPA. COPA is used for your profitability analysis. For analyzing the profits on the sales, you will be using a COPA tool. If you know these points at the beginning, that is more than enough. Later on, anyways, you are going to understand what it is and all. But at the beginning, when you're talking about sales, these 3 points should strike your mind. Clear?
That's clear.
Okay. Now,
Uh,
next one. Yes. Let me write about assets. Asset
Sir,
accounting.
sorry to interrupt you, sir.
Go ahead.
Yeah, can you please write down all these 3 points? I think accounting, account receivable, and I think SD side, what you have told. Can you please write down?
The names.
Yes, yes, sir, relating to COPA.
So point number one, you need accounting, which is your AR. Point number two, logistics, which is your MM and ST you must know. Point number three, COPA. So these 3 points we must remember from the accounts receivable side. Okay.
Okay,
Sir,
sir.
could you please include the questions also, sir, being asked in the session about your explanation, so that whenever we refer the file, we will be able to recollect easily.
Anyway, these questions I'm going to list out when we're on this particular topic. Now we are only trying to understand what is what.
Okay.
Okay. So I'll review all this. I'll explain all this in detail, and I'll list out all the questions, and I'll make you understand how you will have to understand the question, how you need to answer the questions.
Sure. Okay, sir. Thank you.
Okay. So next one we will be talking about, or we must know about, is your asset accounting. When you talk about asset accounting, this asset accounting is all about your fixed assets. Here we are talking about fixed assets. When you're talking about fixed asset, we are talking about asset which will give us benefit for more than what period?
1 year.
More
More
than
than
a
1 year.
year.
Right? Any asset which is going to give you the benefit for more than 1 year is called as fixed asset. Any asset which is going to provide you the benefit for less than 1 year, we normally call it as current asset. In short, your assets we classify as current asset and fixed asset. Now these fixed assets, when you talk about fixed assets, will have classifications or groups. It's not that you call everything as a fixed asset. Within fixed asset we have certain classifications or certain group. What is the classification group that you have in your fixed asset? So I would say land and building is a fixed asset, and I would say plant and machinery is a fixed asset, and I would say furniture and fixtures or fittings. Fourth one, computers. Fifth one, softwares and licenses. Sixth one, I will say motor vehicles. And seventh one, I would say asset under constructions. Are these correct? So whatever is part of this category, we normally call it as fixed asset. If you talk about land and building, so you must know what is land, what is building. For any land, you don't call it as a land. Land, you have a specific name for it. I will say land in Hyderabad. I will put a name for it. Similarly, when I say building, I will have name for a particular building. So I will have a particular name. Let's say head office building, or Hyderabad branch building, or Mumbai branch building, or US branch building, whatsoever. I will have a name for everything. Similarly, plant and machinery. Whatever the plant I have, whatever the machinery I have, there will be a name for it. Furniture and fixture. When you talk about furniture, you need to specify what furniture you are talking about. I may be talking about chair, I may be talking about sofa set, I may be talking about dining table, I may be talking about conference room chairs or conference table, whatsoever. Computers, I have to specifically mention about laptop, desktop, whatever it is. The detailed information will be mentioned according to the class or according to the grouping or classification. This asset grouping, this asset classification is predefined according to accounting principle or according to accounting standard. Whatever the accounting standard we are going to refer, based on that you have to classify the fixed asset. In the similar way, you need to produce your fixed asset in your financials, that is your balance sheet. In your balance sheet, you cannot just like that put everything as asset. Within the asset, you need to sub-classify. Under the asset, you need to write value of your land and building, value of your plant and machinery, furniture, computer, everything. You need to put original cost plus the current value of it. So asset is always represented at original cost in accounting. When I say asset is always represented at original cost in accounting, where is your asset represented? Is this P&L or is this balance sheet?
Balance sheet.
Balance sheet.
Your asset is represented in the balance sheet. When we are talking about asset is represented at original cost in the accounting, I'm talking about in balance sheet. But when you are using asset will lose its value due to usage or life. Correct? Whether you use or you do not use, either based on the usage or based on the life, asset will lose its value. Am I correct?
Does that include land also?
Correct.
Right. What is the other one you said?
I said when you said it, if you're using the asset, it loses value. I said it's not applicable to land also.
No, not to the land. Land will always increase the value. So we put land and building separately. Land will always increase the value and building will always decrease the value. In short, for land and building, we normally don't depreciate, we appreciate the value. There is something called asset revaluation, because every year the land values will be realigned or reevaluated by different the accounting standards and all. Correct? A market valuation, fair value, and then market value. We use, there are certain terminology. When we are talking about asset revaluation, I will talk about this land and building. Okay, so this asset will lose value due to usage and life. This is normally called it as wear and tear. In general, we would have heard something called wear and tear. So the same wear and tear is nothing but due to usage or due to its life, the asset will lose its value. Now, in the balance sheet, we must produce the current value of asset. In the balance sheet, we must produce the current value of asset, because we are understanding that asset will lose its value due to its usage and loss. Now, every asset you are using on a daily basis, every month your asset is losing 1 month. Correct? Every month your asset is losing life of 1 month. So the 1 month related cost, the 1 month related amount, you need to reduce from the asset. Now, any amount that you are reducing from your asset due to its usage or due to its life is called as what? Depreciation.
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 So, asset value reduction is posted using depreciation. Whatever the value we are reducing from the asset, we will be posting it using depreciation. Now, depreciation is posted on a monthly basis. Is this correct? You have to post depreciation on a monthly basis. Now, Any questions so far on these 5 points?
No.
Clear, right? All right. Now, total, I think somebody is not on mute. Please be on mute. Total depreciation is called as, or I will say, terms to remember. There are certain terms that we need to remember with respect to asset accounting. First one, APC or APC value. Second one, depreciation. Third one, accumulated depreciation. Fourth one, net book value. Okay, these four are sufficient as of now. So first one, or the first term that we need to remember is the APC value. When we talk about APC value, what are we talking about when we say APC value? Any idea, anyone?
Sir, the original cost of the asset.
Right. When you talk about APC value, we are talking about the original cost of the asset. I will say this, original cost. Depreciation,
Value reduction from asset.
so monthly value reduction from asset. Correct? Whatever the amount that you are reducing on a monthly basis, that is called as your depreciation. Accumulated depreciation, this is your total deducted depreciation from asset. Is this correct? If you feel these are a little tricky to understand, let me know so that we will try to write in a different way. Net book value is current value of asset. Are these terms clear? Any questions, doubts on this?
So what is the difference between depreciation and accumulated depreciation?
Let's say I am using my asset from January 2023. Okay, so I would say we purchased an asset on January 2023, and now we are in which month?
July.
We are currently in July. Currently we are in July 2023. Now, based on these two statements, we are using asset from Jan to July. Am I correct?
Excuse me, sir. I have a question.
Yes.
Yes.
What is the difference?
No, I cannot hear
Actually,
your
both
question.
are reducing the value of the assets.
Difference
Sir,
between,
accumulate depreciation and depreciation. Both are reducing value from the assets.
correct. That's what I'm writing now. So the points that I'm writing now will answer your question. Okay.
Okay. Sir.
Yeah. So according to this, what I'm saying, we are using asset from Jan to December. So I will write January, February, March, April, May, June, and July. Clear? We are using asset from Jan to December. When we talk about depreciation, we were talking about monthly value reduction from the asset. Let's say on this asset, the monthly depreciation is 100. On this asset, monthly reduction or monthly depreciation is 100. I will put 100 everywhere. Copy. I'll put this here. Is this clear?
Yes, sir.
Right. So if I'm talking about depreciation, I am talking about one particular month. Depreciation is always a particular month. That's what you have written here. Monthly value of reduction from the asset. In short, if I'm talking about depreciation, I have to specifically mention for which month I'm talking about. If I'm talking about January, what is the January month depreciation?
100.
100. If I talk about January, you will tell 100. If I talk about March, how much March depreciation?
Same amount, 100.
100. If I talk about July month?
100.
100, sir.
100. Now, whatever the month I am talking about, you are going to mention the depreciation posted in that particular month. Correct, sir?
Yes, sir.
Depreciation is that particular month value. When I'm talking about, please be on mute, not your computer. Okay. So when you talk about depreciation, we are talking about the month in which you posted the depreciation. Depreciation is always talks about 1 month amount. Depreciation always talks about 1 month amount. Whatever the month you are talking about, that month value you need to represent. On the other side, when I'm talking about accumulated depreciation, I am talking about total deducted depreciation from the asset. If I'm talking about January, since we started calculating depreciation from January alone, if I say what is the depreciation or what is the accumulated depreciation in January, my answer is 100. If I say what is the accumulated depreciation in February, my answer is until February. I need to include January and February, which means 100 in January, 100 in February, 200. If I talk about what is the depreciation in the month of April, I need to take April, which means this is not only April, this is until April. Correct? Depreciation is only April, accumulated depreciation is until April. Clear?
Yes, sir.
If I write depreciation and I will write accumulated depreciation, this is only for the month, this is until that month. Okay, if I'm talking about depreciation, let's say here I will mention May. So May month depreciation I will tell, May month accumulated depreciation I will tell. If I have to talk about May depreciation, what will be the amount?
100.
If I have to talk about May depreciation, how much?
100.
100.
Why 100? Because depreciation is always only for the month. You have to look at only the May and then you write this amount here. Whereas on the other side, if I talk about accumulated depreciation for the month of May, here this is not just May, this is until that month. You count
500.
May and then go backwards. From this May until the starting, whatever the months you have, whether it is 5 months, 100 months, you go back till the first month. If I go back from May, how much I am getting?
500.
500. This is my accumulated depreciation. Clear?
Yes, sir. Very much clear. Sir, I have one more doubt. Like methods of depreciation, how under what basis we are going to apply, sir?
Yeah, that I'll write down now.
Okay. Got it, sir. Thank you.
Yeah. Now this is how you are going to do this depreciation and then accumulated depreciation. Now APC value is nothing but the original value of the original cost of the asset. Let's say I am purchasing an asset. Now I'll put another example. let's say we have purchased a furniture, purchased a office table for 50,000. Okay, I'll put depreciation at the rate 10% per annum. Clear? We purchased a office table for 50,000, depreciation at the rate 10% per annum. Now, these four terminologies that I have listed, let me take down here. Copy, and I'll put this here. From this example, APC value is original cost. What is the value that we purchased asset for?
50,000.
So I will mention 50,000 here. Depreciation is currently a question mark. This is also a question mark. This is also a question mark, which means whenever you take any asset transaction, point number one, we need to look at when did we purchase the asset, at what rate we purchased the asset, and what is the depreciation on it. I would say we purchased the asset for 50,000. 50,000 will become your APC value. On the 50,000, you have depreciation. You also have accumulated depreciation. Now, in your asset purchase, you are able to see depreciation at the rate 10% per annum. One point that I want you to remember here is depreciation is always calculated yearly, posted monthly. Clear?
Yes,
depreciation is always calculated yearly, posted monthly. So here, whatever you have, depreciation at the rate 10%. Now, whether I mention this per annum or I don't mention this per annum, you need to keep in your mind whatever the rate or whatever the method, whatever the logic I tell, depreciation for 5 years, depreciation for 10%, 20%, whatever I'm mentioning, you need to keep in your mind depreciation is always calculated yearly. If I'm mentioning 10%, is this 10% per month or 10% per annum, per year? Per year. This depreciation 10% is always per year. So now here, if I put depreciation per year, this will be, what is the asset value?
50,000.
50,000. So I will say 50,000 multiplied by 10%, correct?
Right.
So this is 5,000. Is this clear? Depreciation per year will be 5,000. Now depreciation per month, this will be per year, which is 5,000 divided by either 12 months or 365 days.
Okay.
Okay, either you can divide this by 12 months so that you will get 1 month depreciation, or you divide it by 365 days, you will get 1 day depreciation. You multiply this 1 day depreciation for 1 month days. In a month, you may be having 30 days, 31 days, 28 days, in leap year 29 days, correct?
Yes, sir.
So based on that, you do it so that you will get it. So accordingly, you have to do it. Let's say for simple example, for easy calculation, what I do, I'll try to mention 12 months. So what I'll do, this 5,000 divided by 12 months. How much will be the depreciation? 416.67. So when I talk about my depreciation on the asset, I will always calculate my depreciation annually, which means per year. For 1 year, my depreciation is 5,000. For 1 month, my depreciation is 416.67. So this is the logic that you need to follow in your asset accounting. Always calculate a depreciation yearly or annually, charge the depreciation or post the depreciation monthly. The total of 12-month depreciation is your annual depreciation or total depreciation. In this case, your depreciation will be how much?
5,000.
This is 5,000. Now this is still a question mark. This is still a question mark because my intention is to find out accumulated depreciation. My intention is also to find out net book value. When I want to find out the net book value, I need to find out the net book value on a particular date. Am I correct?
Yes.
Correct. Correct.
So you
We
cannot
need more
represent.
data. From which date to which date we use this depreciation, then after we can understand how much depreciation.
Correct. So there are certain points which we cannot update the numbers straight away. From the accounting, if you wanted to update certain numbers, we need more clarification in order to provide or in order to produce the accurate information. Here I did not mention when the asset is purchased. Correct? When the asset is purchased is a question mark. You do not have the information from when you need to charge the depreciation. I did not mention when I want to know the net book value of the asset. In short, the current value of the asset at what time I want to know, I did not mention. If you do not know from when your asset has been in use, in short, when you purchased the asset and at what month you want to look at the report, it is not possible for us to produce the number. For example, I would say in Jan 2023. Okay, now I'll put net book value in July 2023. Clear?
Now, once again, we can't, sir.
Yes, go ahead.
Sir, we can't calculate the depreciation when we purchased that month onwards, sir. It is different with that month and usage of month, sir. Purchasing month and usage of month is different, sir. It is both are same, sir. Both months are same.
Both are possible. Sometimes what I can do, if I purchase the asset in month of June, I can charge depreciation from, sorry, if I purchase the asset in the month of January, I can start calculating my depreciation from January, which is possible. I can also start calculating my depreciation from the month of February. That is also possible. It depends on the logic or the method that we are following in that particular country. Both are possible options. Okay, when I talk about or when we talk about depreciation calculation methods, you will understand. Currently, we are not talking about depreciation calculation methods. We are only trying to understand the basic points in the asset depreciation. Okay, there are different dates, different terminologies, different logics that I will list out one by one. Clear?
Sir, sorry to interrupt you. Can you please repeat that madam question?
Which one? This one?
Uh, just now the madam has asked you.
Okay, so the question is, if you purchase the asset in January month, do we charge depreciation from January month or we charge it from February month?
Okay, sir, got it.
Okay, so there is something called capitalization of your asset. Sometimes what will happen, you will purchase asset this month, I will purchase the asset in July month, but I may not be using it now, I will be using it from October month. Possible or not?
Yes, sir, definitely.
Right?
Possible.
I'll purchase it now,
Yeah.
but I'll not use it immediately. I'll use it after a month or after 2 months. Then I am purchasing the asset now, but I am capitalizing it after a month or after 2 months, which means my depreciation will be my depreciation will be charged after 2 months. That is also possible. So it depends on different scenarios, different business requirements, which we will discuss when we are actually working on asset accounting. Okay.
Then sir, where we put that date, that capitalization date? Is there any field in SCB, right, to put the capitalization date or asset purchase date?
Capitalization date is automatically updated by the system whenever you
Okay.
purchase it. The moment you are loading first debit balance into your asset, that first debit balance date will become your asset value date. Sorry, asset capitalization date.
Means capitalization means purchase date, right, sir? Asset purchase date.
Correct. Yes.
Okay. Means acquisition or capitalization both are the same, right, sir? Acquisition or
Correct.
okay. Okay.
Right.
Got it, sir.
Now let's come back to this. Here I have listed we
Sir,
purchased.
one question I have.
Yes.
What about the, I mean, any assets we have bought on the lease? Say, for example, computers we have bought on the lease. Do we calculate depreciation on those as well?
For lease assets, it's a different module. Lease assets is a different module. On the lease, we are going to pay interest.
We are going to pay interest. Okay.
Yeah.
Thank you, sir.
Because lease asset is not our own asset, right?
Yeah, it's not our asset.
Yeah. So there you are going to charge interest. In place of depreciation, interest will come into picture when we're talking about lease assets.
Okay. Thank you, sir.
Okay.
Sir, your capitalization date means is the date which we put the asset in usage, is that the one?
So there are different meanings for it. The date when you are putting the asset to use, you can call it as the depreciation start date.
Okay.
Okay, there are different meanings for it depending on the business scenario. The meanings for this will get slightly changed. So that is why I'm not talking those dates now, which will lead to unnecessary confusion at this particular point of time. Acquisition date, capitalization date, value date, depreciation start date. These dates will lead to confusions. This will be clear when we are actually on the asset accounting module completely, so that you can practically see a complete flow of an asset until its creation till the retirement. There you will understand the importance and the relevance of each date. If you are changing the dates, how system is changing the numbers, when you see it on the system, you can easily figure out what is happening and how values are getting updated.
Okay, thank you.
Yeah.
Ajay, assets taken for lease is part of FI module or a different module?
FI only. If we implement lease asset accounting, then we will be using the lease assets there.
Okay.
So it's a different configuration basically. Okay, now let's try to fill up this information. We've listed asset purchase value or APC value. APC is nothing but acquisition and production value. APC is equal to acquisition and production value or acquisition and production cost. In short, the purchase value is nothing but APC in SAP. In general, we call it as what is the value of your asset purchase or what is the original cost of your asset. That is nothing but APC in SAP. Your purchase value is 50,000. I will write my APC value as 50,000. When I'm talking about depreciation, I am always talking about depreciation per annum here. If I'm not writing anything, I'm just putting depreciation. Let me put depreciation per annum. So what will be the depreciation per annum? It is 5,000. Now next one, I have listed depreciation, accumulated depreciation. So apart from accumulated depreciation, let me put one more point. Third one is depreciation monthly, and this I'll put fourth point. This I'll mention as fifth point. Monthly depreciation we have listed 416.67, and accumulated depreciation is dependent on the report in which month you are generating. Currently, in which month we are generating the report? For which month we want the current value of the asset?
July.
We want the value of the asset in the month of July. If you want the value of the asset in the month of July, you have to consider accumulated depreciation until July month. Always remember, asset report can be extracted only on the month end date. I cannot generate the report in middle of this month. Let's say I want to look at my asset report or asset value, I can only look at as on the month closing date. Why I can look at only as on month closing date? Because your depreciation can be charged at the month end only. If I want to look at my July value, system will ask you to please input July closing date. July closing date is 31st July. If I try to run the asset report on 25th July, I will not get the data from system, because system will give you the data only for the month end date, not for the middle of the month, or not on a particular key date of the month. It is always closing date of the month. So when you are generating any report for any particular month, always remember you include that particular month depreciation. So in this, accumulated depreciation will be from when to when?
Jan to July.
Sure.
January to July.
From January to July. January to July, how many months?
7 months.
7 months. So I need to charge this amount 7 times, correct? Is this correct?
Yes, correct.
Accumulated
Correct.
depreciation is nothing but every month, whatever you are charging, you are going to total everything, the total depreciation. If I put this will be your 2917. This will be 2917. Now, if I talk about my net book value, I am talking about current value of the asset. So when I talk about current value of the asset, NBV is equal to APC minus accumulated depreciation. Now here, what is your APC?
50,000.
50,000 is your APC, and what is your accumulated depreciation?
2917.
2917. If I reduce my accumulated depreciation is nothing but total depreciation on that particular month or till that particular month. So 47,083 will be your net book value as on July. You purchased asset for 50,000 in the month of January. This 50,000 asset is now costing, or is now the current value of 47,083. Now this asset, normally what you will do at the end or at the middle or during any particular time period, you may be selling the asset sometimes, or sometimes you may be transferring the asset. Possible or not?
Possible, sir.
Right? When you're selling the asset, when you're transferring the asset, or when you're moving asset from one place to another, whatsoever, you need to find out what is happening with this asset. At the time of selling the asset, I need to find out whether I'm making profit or loss. Sometimes what will happen, asset will get corrupted or asset will get breakdown, cannot be repaired. You have to scrap it. Right? Let's say I am using a laptop. Let's say the table we are using. Now due to some reason, maybe there is some fire or there is something, the furniture has broken down. Furniture became two parts. There are cracks in the furniture. Can I repair my furniture? If it is a wooden furniture, or I need to throw it and then purchase another furniture. It is a wooden furniture, it broke into two parts. The furniture legs broken down, or it has got full cracks. If somebody sits on the furniture, he will fall down. Now will you still repair the furniture, or you will replace the furniture? What will you do?
Replace.
Replace it.
We will be replacing the furniture. Now according to me, this furniture will give me, or will run for 3 years. According to me, this furniture will run for 3 years, but it's been only 7 months. There is no rule that your furniture should last for 3 years. The maximum time period that you can show this as an asset is 3 years. In between, you can do anything. The furniture may get damaged. Let's say on 7th month, the furniture got damaged. Now it cannot be used. Even if you repair it, it is not convincing enough. You decided that, or the management had decided, let's scrap this furniture. We are purchasing another furniture. At that time, you want to know what is the loss you are making. Correct?
Yes.
Because you have purchased furniture, you have used it for certain time duration. Now it has stopped working. It cannot be used anymore further. Now you want to know whether you can sell this furniture to somebody. If yes, at what rate you can sell it. Let's say this furniture is now 7 months old. it's not in working condition, or you're not fine with it, you want to replace it, you are planning to sell it. If it is in working condition, you will be selling it. When you want to sell it, you want to decide a price, correct?
Yeah.
When you want to sell this furniture, you need to decide at what price I can sell it. For that, you need to know what is the current value of my furniture. Only then I will decide whether to quote what margin of profit. If I know that the value of this furniture is 47,083, will I be selling it for 40,000?
Is it
Can I sell
something,
this for 40,000?
if the amount is if the asset is material, is there something insurance is covered? Something like that, if it is like fire.
But this furniture is not under this one, no? For this
Okay,
wooden
okay.
and all, you will not get insurance, right?
Okay. But wherever the insurance is covered, those is applicable, is it?
Yeah, there you are going to replace it. Your insurance company will give you another asset, right? So at that time you will retire it, and then you will create another asset with a new capitalization date.
Okay.
Okay. Now, assuming this asset value is 47,000, will you be selling it for 40,000?
No.
No, right? You will be obviously selling it for more than 47,000, maybe for 48,000 or 49,000, where you are going to tell this is a new one we used only for 7 months. Yes or no? The moment you start using it, value of the asset will drastically come down. Same thing, if you purchase a new mobile phone today and you try to sell it after 2 days, will anybody buy it for the same price? The moment you open the sale, you started using even it for a one day, nobody will buy at the same rate. Am I correct or not? Everybody
Yes.
will tell, no, you already used this, I will not pay this much. The similar way is here also. But before you decide the price, you have to calculate what is your actual price, the actual value of this asset on that particular month. Accordingly, you will decide whether you can sell it for profit or loss. Let's say this is the value, but this is not in a usable condition. It has got 47,083 net book value, but this cannot be used now. This is not in a usable condition. When you know this is not in a usable condition, will you be selling it for profit, or you will sell it for lower cost, lower price?
Lower.
Profit.
If the asset is not in a usable condition, whoever purchases it cannot use it, they have to repair it. You will still sell it for the actual price, or you will sell it at lower price?
Yeah, discounted price, lower price.
Sell it for lower price. Otherwise, what will happen? You have to scrap this completely. Instead of receiving 47,083 as a loss, you are selling it for some rate, and then you are reducing your loss in your financials. Correct? If I scrap it,
Correct.
Yes,
if I
Ajay,
scrap
correct.
it, I need to scrap it for 47,083. So this scrap is a pure loss. So instead, if I sell this for 20,000 at least, now my loss, instead of 47,000, I am booking a loss of 27,000 only.
Yes, yes.
Correct. Correct.
Right? So these points we need to slowly understand, especially what is happening to your asset, at what date you are doing, what kind of entry you are passing. Based on this, the impact we need to understand. It's all about the number. It's all about numbering a game, your asset accounting. If you understand what is happening with the assets, how the values are getting calculated, you will understand everything in asset accounting. If these calculations, these logics are not clear, we will go mad with asset accounting. Okay, it's all about understanding the basic numbers, basic terminology. Then there is no way that you will find it a difficulty. Otherwise, most of the people, if you see, they say that asset accounting is tough. You would have heard that asset accounting is tough, difficult to understand, because they don't understand basic calculation logics. Basic fundamentals are not clear. Then obviously, when you get any problem, when you have to configure, when you have to resolve anything, we find it a difficulty. But if you look at it in a right way, you will not find it a difficulty from any point. Okay, any questions so far? Any doubts?
Yes, sir.
I have a question. My first question is for the accumulated depreciation. You said it's 2,917. Are we calculating the depreciation on July? Because I thought it was supposed to be at the end of the month, as you said.
Yes, we are calculating for July as well, because whenever you generate any report in asset accounting, it is always generated on the month end date. Month end date means depreciation is included.
Okay, okay. And my second question is, let's say we buy an asset which is a car, and we decide not to use it probably for a year. Based on the condition of the market, um, then let's say we start using the car after a year. Based on the condition of the market, how are we going to probably calculate the depreciation on that asset? Are we going to start calculating it from the time we start using it, or from the time we bought it?
You will be charging the depreciation from the time you use it, not from the time you purchase it. There are two dates when you look at any asset master or whenever you create the asset. One date is your capitalization date, which is always updated the moment you purchase the asset, the moment you post capitalization or acquisition, the acquisition date will become your capitalization date. And there is one more date called a depreciation start date. Okay, whatever the date you mention in the depreciation start date, from that date the system will charge your depreciation.
Okay.
This is again based on the config setup what we are doing.
Thank you.
Yeah.
Sir, I have a doubt. Sir,
Yes.
sir, like one journal entry, depreciation account to accumulation depreciation account. So value will be a 416 for both now debit and credit, or if we think of for per month, so how that accumulate depreciation will the value what will be there?
So for that to understand, you need to understand this point. There is something called balance carry forward in accounting. This is not SAP specific. This is accounting specific. Now we have two type of accounts. One is your P&L accounts. Second one is what? Balance sheet accounts. Am I correct?
Correct, sir.
Carry forward in the same year, and or I'll say carry forward within the year, and at the end of the year balance becomes zero. This is for your P&L accounts. On the other side, for your balance sheet accounts, it's a different story. For balance sheet accounts, carry forward between years, at the end of the year balance will not become zero. When I say this statement, let's say for example, I have rent, I have bank. Are these two accounts clear? Rent is a P&L account, bank
Yes,
is
sir.
a balance sheet account. Now I will write January until December. So in between you include that all the 12 months. So January is 100, December is 100. So total is how much? 1200, correct? Huh? I'm writing Jan till December. So in between I'm not writing Feb and all. So this is Jan until December.
Correct, correct.
Here also I'll put the same thing. Everything I'll put the same number. Here also it is 1200. Am I correct? Now I'll say this is fiscal year 2023. Here also I'll put fiscal year 2023, which means financial year 2023. Now, as we all know, at the end of every year, you need to close the year, you need to open the new year, correct? Year end we call it.
Sir. Correct.
Now at the year end, what I will do when it comes to a P&L account. So January, your balance will be 1200 or 0. As we all know, current month closing balance will be next month opening balance, correct?
Correct, sir.
For rent in 2024, will it be 0 or will it be 1200?
1200.
0.
Will be 0. For bank,
1200.
this will be 1200. Now above I have listed a point. For P&L account, carry forward within the year, which means within 2023 you can carry forward. Within 2023 you are going to have months only, correct? In January I will tell 100. In February I can tell 200 is my total cost. In March I can say 300 is my total cost. Am I correct?
Yes.
Correct. Correct.
The moment I cross from 2023 to 2024, I cannot say in January my rent is 1200. I'm wrong. I have to say 0. I have to again start counting from 0. But on the other side, when I come to balance sheet account, here carry forward between the years. January I will tell 100. Likewise, December I will tell 1200. Once I say that my December total value is 1200, when I go to next year, January I will tell my balance is 1200, because balance sheet account will not become 0 at the end of the year, but your P&L account will become 0. Why your P&L account is becoming 0? There is something called retained earnings account. Now everybody must have heard about something called chart of account, correct? We all must have heard something related to chart of account in SAP. In your chart of account, as part of your configuration, in OB53T code, we will be updating retained earnings GL account. We need to understand why we are maintaining this retained earnings GL account. Point number 1, when you update that configuration, you will get a warning message at the bottom stating this GL account does not exist. Since it is a warning message, we will press enter, we will save it, we will proceed. Am I correct?
Yes, sir.
Correct. Now, most of the people, they do not create their GL account. Is this correct? I am talking only in the practice environment. You configure it, you forget it. We will not create that GL account. Second point, here points to be remembered. Now these points I am writing so that you will not be committing these simple basic mistakes. These are the fundamental mistakes. If we are not clear on this, whatever you talk on SAP at certain basic silly questions, we have to keep quiet. Point number 1, you need to remember chart of account. Point number 2, OB53. So GL does not exist. Warning you will get. Point number 3, GL master for retained earnings account. And point number 4, you have something called balance carry forward in year-end activity. We must have heard something called month-end activities, year-end activities in SAP.
Yes, sir.
Correct? People will ask you in your interview also, have you worked on month-end activities? Have you worked on year-end activities? Now, balance carry forward is one of your year-end activity in SAP. When you're performing year-end activity, which is your balance carry forward, current year balances will be rolled over or rolled up to next year. So in this process, all the P&L account closing balance will go to retained earnings account. Is that correct? All the
Right.
P&L account balances will go to retained earnings account. All the balance sheet accounts will go to the same account. Is my point clear?
Yes, clear, Vijay.
Yes, sir.
During year end, all P&L account closing balances will be moved to retained earnings account. All the balance sheet account closing balances will be moved to same balance sheet account. Correct? Just remember these points alone. I'll explain everything practically with figures on the SAP.
Okay, sir.
Okay. And another point, retained earning account is balance sheet account. Is this correct?
Correct.
Retained earnings account is a balance sheet account. Now, based on the above statement, for the balance sheet account, current year closing balance will become next year opening balance. Let's say I'll put 2023, 2024. Account year 2023, year 2024. Let's say if I put rent, 2023 is 100, 24 it will be 100 or 0.
Zero.
Sir,
Zero.
zero, I think.
Zero.
Rent is P&L account, right?
So this will be 0 because it's a P&L account. It will be carry
Right.
forward to the retained earnings account, not to the same account. If I mention bank, this is my 100. Will this be 100?
Yes, it will be
Yes,
100.
sir.
Yes.
100.
Yes.
This will be
Because
100.
it's a balance sheet item.
Yeah. Now, if I write retained earnings, my retained earnings is 100. Will this be 100?
Yes, it will.
No, in FY23 it will be 0 and FY24 it will be 100.
No, my retained earnings account is 100 in 2023. In 2024, will it be 100 or anything else?
No, it will
What
be
else?
100.
It will be
I
10.
think 100.
100,
It
sir.
will be 100.
Why it is 100?
Balance carry forward.
RE is the
Balance carry forward, no?
Balance sheet
Balance sheet.
balance sheet account. Remember, in SAP, RE closing balance will never be same as RE opening balance. When I pass this statement, is this 100 or not 100? With this statement,
It
is
should
this
be
going to be
0.
100?
0.
Not
I
100,
did
sir.
not mention it is 0. I just
More than
mentioned it will
100.
not be the same. Okay, it will not be 100.
So,
It will not be 100. It is greater
More than
than 100 or
I got you.
Sir,
less than 100.
you
Clear?
you are saying that like expense account is there and income account is there. That profit we are transferring to balance sheet is the retained earning account. We can say.
Yes.
Okay.
The closing balance
Understood.
of the P&L will.
Yes. Yes. Correct.
I'm talking
Understand.
about the GL RE which you are mentioning in OB53. In OB53, you will declare a GL account, correct? As part of chart of account. Normally,
Yes,
when we
sir.
configure chart of account, we will be mentioning a retained earnings GL account in OB53. Whatever the account you mention, if the 2023 trial balance, if you look at 2023 trial balance, I'm able to see 100. If I look at 2024 trial balance in the month of January, I will not be able to match this 100 here. And if you say that you worked on SAP, you have at least 1 year of experience, and this you must talk about in your interview as one of your support ticket. You can talk about this as a support ticket if you worked on, if you are showing at least 1 year of experience, and if you say that you worked on year-end activity as a FICO consultant, you must work. This is one of the support ticket you must talk about, because majoritarily in the interview, whatever the support incidents tickets that we talk are not effective or are not sufficient enough to convince the interviewer, because the kind of tickets that we talk will easily represent that this is something that you googled or somebody told you. So
Ajay,
there
can
are
you give
certain
the
practical.
justification why? Can you give the justification why the closing balance of 23 will not be the opening balance for FY 24?
Because your retained earnings, will it receive any postings or it will not receive any postings?
I'm not sure on that.
So your retained earnings account will not receive any postings. If you look at that GL account, it will only show the balance, which is a running balance.
Correct.
Right? Now, if you look at that GL account transactions, you will not find any transaction unless you pass a manual entry. There will be no transaction that you find the breakup of it.
Okay.
What it will do, it will take the last year closing balance plus last year P&L result. In 2023, whatever the balance that it is showing as balance, that balance plus 2023 P&L account value will be your opening balance. This will not match. Okay, when we make the initial trial balance before I upload in our company code configuration, I'll explain this logic. Okay, when we talk about this with the numbers, that is more easy to understand. Practically, if we discuss this will lead to unnecessary confusion. These points, if you remember, that is fine. So that when we are talking about this, one of you will raise this point, I'll show practically on the system.
Sure, sure. We'll make a note. Maybe.
All right. So, any other questions?
In case of support ticket, what kind of tickets may arise, sir, in terms of return?
Normally, when we're talking about the support tickets, your support tickets are raised by whom?
Yes.
Users. What will user do?
Maybe periodical activities and postings there.
There are 3 activities that user will do. What are those 3 activities which user will do?
Sir, master data, transaction data, and reporting.
Right. User will perform, or user will be working on master records, in short, master data. Second one, transaction data. Third one, report. Your support ticket is part of master data, transaction data, report. If you're talking about master data, first we need to understand what kind of masters we have in SAP FICO. Let's say you have GL master. Your user is trying to create a GL account. What are the possible errors while creating a GL? Now, any master data you can create, you can display, you can change, you can delete, correct? You can block.
Yes.
Now, while creating, are there any errors that are possible? While changing, can I change everything? Certain changes are not possible once the GL account is created. Right? Certain accounts your user wants to block it, but there are some transactions in it. You need to pick these kind of things. Similarly, customer master, vendor master, bank master, cost center, profit center, all these things. What kind of issues are possible? So if you look at this particular transaction from the practical business point of view, we will understand. Because when you talk about the support ticket, this is something which is practically happening on a day-to-day life of an end user. correct? So when I talk about a support ticket, I should sound this is practical. Okay, this is possible. Users are doing, but this cannot be a simple basic thing. User is creating a GL account. It is not saving. Why it is not saving? Then they are doing something which is stopping that saving, right? What are they doing something? So you have to be very specific, and the questions support a ticket that we are talking about should be logical, and the other person should not feel that why this issue has come. Is this because of what reason? Is this because of your configuration error or user understanding error, or is this a business process configuration error? Similarly, they are posting any transactions. What kind of entries they are posting? At what entry the user is getting a problem? It is during the transaction posting, he may tell that there is a problem. After posting the transaction, he may tell that he wants to reverse something or update some information. Once the entries are posted, they will be generating various reports. During the report generation also, they might tell that in this report numbers are not matching, or we want a new report, we want to make a corrections in the report. At these areas, we need to look at from business point of view. So when you are looking at from support ticket point of view, you need to first look at a particular process. I am looking at accounts payable. In accounts payable, what do I have? Master data, what kind of masters I have? Transactions, what kind of entries I am posting? Reports, what kind of reports I am preparing? Let's say from the accounts payable, you are talking about invoice posting. Let's say your user is telling, I posted an invoice, but this is a duplicate. System allowed me to post a duplicate payment. As a result, we ended up making double payment to the vendor. I want to know why system has allowed a duplicate payment. I will put this as a ticket. Now, I don't want you to give me the solution, but before you provide a solution, first give me the reason why did system allow to record a duplicate invoice. This is the support ticket. So for every ticket, there is something called RCA, root cause analysis. You need to mention why the issue has happened, okay, and what solution you are proposing. Is this a temporary solution or is this a permanent solution? Because there are certain errors which are common. You cannot do anything for it. But there are certain errors which will have huge business impact. Correct?
Yeah.
Oh, one vendor invoice has been duplicated, now which we figured out. Let's say the amount is very less, that is fine. What if the amount is very huge? The huge amount is paid twice. Now, will your client or user be okay with it? No, right? They will tell, how did system allow us to record the second invoice? You cannot say user recorded it, system allowed it. Then system is supposed to stop, right? Correct?
Yes.
Now you have to put these answers on an email. You cannot say that your user entered it 2 times, system allowed it 2 times. Can we say like this? No, right? We cannot say. Then you have to say that there is certain control point, a checkpoint, which are missed. Let's say these points the system will verify to prevent a duplicate invoicing. However, while recording the entry, your user had changed a certain information with which there is no existing record. So something you need to put. And similarly, if you talk about any process, you have to bifurcate that process into different sub processes of your business. In accounts payable, you may be talking about only invoice posting, payment and all. When you talk about payment, how you are making payment? Your payment can be made through cash, correct?
Bank.
You can also pay through bank. If you are paying through bank, you have to either issue a check or you have to do a bank transfer. And while making a check payment to a vendor, what is the process? What kind of errors can happen? And here, if you wanted to issue a check or you wanted to do a bank transfer, you will be working on APP, nothing but automatic payment program. Correct? Now from AP, you went somewhere and then you landed at accounts automatic payment program. And from here, you are going at a check lot, you are going at check processing, DME, all these kind of areas. So when you're looking at SAP, when you're looking at from the business point of view, you have to visualize everything. How a business will operate on a particular process. What will they do? First, we don't have to configure everything. First, we need to understand the process. What is possible? Based on that, what can be the problem? Where can user go wrong? When we are learning, when we are practicing, okay, when we are learning, when we are practicing, anything can go wrong. So what are all the places where we can go wrong? We need to understand. So these points I will explain when we are talking about a particular topic. I will explain what kind of a supported tickets you will get, what kind of errors we will get during the processes.
Sure, sir. Sir, in case of this retained earnings, will it be created every year? Like,
What do you mean by retained earnings? The GL account?
yeah, GL. So once,
No, it's a single GL
yeah,
account.
okay.
Ajay, the retained earning, is it something the current year balance plus the current year profit or loss will be the opening balance for the next year?
Correct. You're right.
So, going back to the written earnings account, so you said, I don't quite understand how it's going to be less than 100 or greater than 100, but you said you're going to address that in the coming classes?
Yes.
Okay.
Coming classes, I'll address it with the numbers, the practical financial figures. I'll make you understand how system will arrive at the number. Okay. All right then. So let's close for today. Let me stop this recording.